All right, let's dive in. Today, we're going to do something a little different. We're going to pull back the curtain on a pretty complex financial product, but we're going to do it by looking at the materials that are usually just for the pros. We're going to decode what guaranteed universal life insurance actually is, and we'll use a specific product called UL Guard to see how it works from the inside out.
It all really comes down to a fundamental human question, doesn't it? How do you make a financial promise to the people you love and know for sure, 100% for sure, that it'll be kept, even when you're no longer around? That question right there is the whole reason that products like the one we're about to break down even exist.
So, let's start with the absolute basics. What exactly is this thing? The name gives us a few clues, obviously, but the details, well, that's where it all matters.
So what the documents tell us is that UL Guard is a kind of permanent life insurance. But here's the key difference. Unlike some other types that might be about building up cash value or investing, this one is absolutely laser-focused on one single goal, providing that guaranteed death benefit. That's the specific amount of money that gets paid out. It's all about the promise.
Now, this is where you can really start to see how it's designed. First, you've got that no-lapse guaranteed death benefit. We're going to circle back to that one because, trust me, it's the most important piece of the puzzle. Second, it has what they call short pay options. Basically, that just means you might be able to pay off the entire policy in a shorter amount of time, say 10 or 20 years, instead of for your whole life. And third, it's built to be a tool for estate planning, which is really just a fancy way of saying it helps you pass on your assets smoothly and in a tax-friendly way.
Okay, so we've got the what, but now for the why. A financial product is just a tool, right? And a tool is only useful if it helps you get a specific job done. So what are the jobs, what are the goals that this tool is actually designed for?
And wow, when you look at this list, you see it's meant to cover a huge range of really big life situations. It's not just one thing. For some people, it might be about making sure their family's income is safe if something happens. For others, it's about making sure there's money to pay for final expenses. It could be leaving a tax-free inheritance, making sure a business can keep going, or even leaving a big final gift to a charity you care about. See the theme? These are all very long-term promises.
Now, just like any specialized tool, this thing isn't built for everybody. And the professional documents, the stuff we're looking at, they are very, very clear about the kind of person they had in mind when they designed this thing.
And there it is, stripped down to just the numbers. The target audience is typically someone between 45 and 75 years old. And that tells you a lot, right? This is for people who are probably past those early stages of building a family and are now starting to think really seriously about their legacy, about financial security that lasts way into retirement and beyond.
This quote from the guide really just nails the mindset of who this is for. The keywords here are affordable and long-term. This isn't for someone looking for a quick investment. This is for someone who wants a predictable, reliable promise that's going to last for decades. They want to set it up, pay for it, and then know, without a doubt, that it's going to be there. Okay, so we've mentioned that no-lapse guarantee a few times now. This is the engine of the entire product. It's the whole point. So how does that promise actually work? What does no-lapse even mean? And what does it take to keep that promise locked in tight? It really breaks down into 3 simple steps, and they all happen right at the very beginning. First, you pick how long you want that guarantee to last, and it can go all the way up to age 121, which is kind of wild. Second, you choose your payment schedule. And third, and listen up because this is the most important part, you have to stick to that plan. You have to pay as planned, on time.
And that leads us to the most critical point of this whole explainer. The word guaranteed comes with a condition. It's a two-way street. The insurance company guarantees the payout, but only as long as the policy owner holds up their end of the deal. It's not automatic.
This slide just lays it out in black and white. It's so clear. Path 1. You pay the premiums you agreed to right on schedule. The result? The guarantee is safe and sound. Your coverage isn't going anywhere. And this is a huge deal because it takes market risk off the table. Its survival doesn't depend on what interest rates or the stock market are doing. Then there's path 2. You pay late, you pay less than you're supposed to, or you start taking loans against the policy. The result? That guarantee can be weakened, or worst case scenario, it could disappear completely. It's a direct cause and effect. So while that guarantee part is pretty rigid, the product itself actually has some flexibility built right in. It's not a complete one-size-fits-all kind of thing. So how can it be tweaked and tailored to fit what different people actually need? This is where you, the policy owner, are in the driver's seat. You get to decide the size of the promise. That's the death benefit amount. You get to decide how long the guarantee needs to last. And you get to structure the payment schedule in a way that actually fits your budget. It's these choices that make the policy fit an individual's actual financial life.
Now, there's another layer of flexibility here that's really important, and it's called living benefits. You can think of these as like safety valves. They're usually optional add-ons that let you get a piece of that death benefit while you're still alive if you get diagnosed with a really serious illness. This can literally transform the policy from just being a tool for your legacy to being a critical piece of protection for some of life's toughest challenges. Okay, so there's also another version of this product out there called SUL Guard. That S stands for survivorship. It's a second-to-die policy, which, sounds a little intense, but it's exactly what it says it is. It covers 2 lives, usually a married couple, but it only pays out that death benefit after the second person passes away.
And this comparison makes the difference super clear. UL Guard is for one person. It's often used for things like making sure a spouse has income. SUL Guard, on the other hand, covers 2 people. And because the insurance company knows it's likely going to pay out later, the premiums are usually lower. So you see it used a lot for really big long-term estate planning goals, like making sure there's cash to pay estate taxes or leaving a really big legacy to kids or grandkids.
All right, so let's boil all of that down to the most important points. 1, this is permanent life insurance built for one main reason, that guaranteed payout. 2, it is all about long-range planning. Think legacy and estate. 3, that no-lapse guarantee is incredibly powerful, but it's conditional. It completely depends on you making those payments as planned. And 4, you've got options to customize it. And there's even a version designed to cover 2 lives.
And finally, we have to look at this sentence. It's the kind of thing that's usually buried deep in the fine print of the source material, but it is so, so important. All it's saying is that the guarantee, it's ultimately backed by the financial strength of the insurance company itself. At the end of the day, a promise is only as strong as the person or company making it. Which kind of brings us full circle to a final thought. After seeing how a real financial guarantee is put together, with all its conditions, its dependencies, and the choices you have to make, it really makes you think, doesn't it? When you're planning for your own future, for your own loved ones, what does that powerful word, guaranteed, truly need to mean to you?